Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Thank you for being back with us on another live stream. We're just kicking off today, and it looks like I think my vision must be blurry here because I don't think the S&P 500 ever actually goes down, right? What is happening here? S&P is actually lower here today. Following yesterday's sell-off, we actually saw some follow-through. And this is kind of unique because recently we've seen this pattern just be so incredibly consistent within the stock market, which is basically each time the market drops, there's a huge pop to follow, right? And, you know, on a longer term basis, that is generally how stocks move. They typically do go up, but not always, and not for such crazy win streaks like we've recently seen. They usually don't last for very long. But today we might just be seeing a little bit of a rollover here in the stock market for the first time in quite some time. That being said, it's too soon to say that. You know why? Because we have still, I want to show you something on the S&P 500. This is December. This is the biggest pullback that we've had in some time, 2.75%. We have had such a significant period of time since we've had a 5% correction in the stock market. The last time that really happened in the S&P 500 was October of 2023. Okay, so check this out, guys. A 5% pullback in the S&P 500 is not only common, but very usual, very, very normal to have a 5% correction. You can see it. You can pick out any time you'd like in the S&P 500 since 2023's October. We have gone basically straight up. We have had no significant pullbacks. I would say that if you actually finally get something here where we close underneath this level of structure, this level of support, we may finally get that pullback. Now, what's cool here is that I have very little index exposure currently. I am still long gold and oil, which are making me feel really, really smart right now. I got to say, I wish my trading always looked this good. I said this yesterday. Please understand that this isn't, I'm not trying to come across as arrogant or anything right now, but I have some really good trades going on. And while this is not, you know, an everyday, all the time experience for me, you know, this is kind of cool to see some nice follow through on the commodities. Meanwhile, you're seeing the stock market finally get a bit of a an inhale, right? It's been doing a lot of exhaling, and what I mean by that is just gone straight up, like exhale, 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 inhale, exhale. Markets move like that. That's usually how they progress. They don't go straight up forever. So that being said, with oil, what's my next move here? Well, I need to trail a stop loss, right? So I need to move my stop loss into profit further. I will do that here momentarily. The key thing here that I love about this oil chart here, and gold for that matter, is that we are breaking through key levels of resistance. And breaking through key levels of resistance is a very symptomatic thing of a really strong bull market. And I think we might be seeing commodities really start to pick up in 2024. I'm not, early to that by any means, right? Because oil's been making a move. It's actually, if you take a look at the sectors of the U.S. stock market right now for the year 2024, energy is actually, I think it's the top performer. Here's XLE. XLE is the energy ETF. These are companies like Exxon and Chevron. And surprisingly, this sector is actually the top performing sector in the US stock market this year so far. So anyways, back to what I was saying about oil here. Like I said, I do need to trail a stop. What I mean by that, for newer traders in the audience, newer traders, what I'm saying when I say trail a stop is this was my initial order to get out of the trade. If I was wrong, I bought over here, right? So I bought, put a stop loss here. Market has made a good move here now. And my stop loss is trailed here, but I need to trail it further. My next spot to trail it is probably like 82.5. Before I continue to talk about my winners, let me also just point out a loser that I'm dealing with. TLT totally reversed on me, and this is not going so swell. I'll come back to this. It's currently 9:27 where I am. The US stock market opens up at 9:30. So I'll come back to talk about this so we can see a P&L update, but it's not so pretty on TLT. So I have one trade basically where I am bullish bonds, and that has completely evaporated all the profits that I had on that trade. But at the meantime, I've also got oil and gold. Both of them, I'm long on them and doing just fine on. So here's my two commodities trades. Gold and oil, they're really running right now. Just shy of 13,000 on gold and 9,000 on US oil. So we'll continue to try and let those run. Here's a quick update on gold here, by the way, guys. Gold, I probably got a trail stop on this one too. Let me check before I say that. Let me go look. So I took this trade off the daily chart. Yeah, I need to trail a stop on both trades. I need to trail a stop on gold. I'm going to move it up just here behind this level. And oil, I showed you where I need to trail stops as well. For those of you guys who are in the group, I will share that update in just a moment. Continue to trail out of these things until we finally hit profits on them. But these markets have just been so moving with so much momentum. The S&P 500 is down 0.8%. The NASDAQ is 1.18%. And again, US oil, I'm glad that, for the most part here, we haven't really been getting a ton of strong bullish reads on the indices. I'll be watching for that. I mentioned that I was watching the Dow Jones. It pulled back to a level, but I didn't get entered into the trade. So S&P 500 neutral. Gold, by the way, also neutral. What that tells me is just trail a stop and wait for profits to get hit. And then when it comes to NASDAQ actually -1. COT data looked terrible for the NASDAQ, by the way. Institutional money, check this out, guys. If you're watching indices, a lot of you guys trade indices. I know a lot of NASDAQ traders are in the room, a lot of Dow traders as well. Look at this. The NASDAQ on the latest COT filing had a significant shift in the bearish direction. So when we look at the change week to week, what we can see is big money picked up 14,168 on the short contract side of things. On the long contracts, they decreased their position by 4,100 blocks here, which is kind of crazy. Now, why is this significant? What are we looking at here? So newer traders who just joined into the stream for the first time ever, we're looking at the commitment of traders data, which we track using our software, the EDGEFINDER. What we're looking at is the commitment of traders data weekly filing. So we can see week to week what big money, that's an ambiguous term, but the point is, what I mean by that is hedge funds, speculative groups, banks, large money managers. These groups, they have to file in the United States, and we as the consumer can actually see that data. Now, we do get it a bit delayed, so you're not getting like minute to minute position changes from institutional money, but this is a weekly filing, and this weekly filing is made available to us in the commitment of traders data, which is a terribly hard to read text file. So my company, A1 Trading, we build software tools that scrape all that data in and make it easy to consume for traders who want to see what institutional money is doing. That is one of the tools that our software, the EDGEFINDER, allows traders to do easier. So NASDAQ, they sold, the pound they sold, the Canadian dollar they sold, the Nikkei they sold. What did they buy? They bought gold, they bought some SPX, little SPX movement there, some big shifts in the long contracts. They did also increase shorts as well, but they increased a lot more longs. Swiss franc, Bitcoin as well. Interesting. Bitcoin is in the mix. We can see that. And here's their long-term kind of net positioning: gold, oil, silver. This is part of the reason, not the only reason, but part of the reason I personally am still long these things myself in my own account. In terms of top setups, I'll go back to this really quick. On the sell side, we still think pound USD is in the picture, pound Aussie. The Nikkei is actually getting a bearish read. Huge. I got to look at the Nikkei. That's really interesting here. So we'll come to that here in just a second. The Australian dollar, pound CAD, euro dollar, Kiwi dollar. So these are your more bearish assets on the list right now. Also, real quick, I just wanted to inform everybody who's watching, if you are a regular stream viewer, I know a lot of you guys watch the stream nearly every day. We are currently launching our 2-year celebration sale. You can currently get 45% off if you direct message my staff on our website. Here's how you can do that. In the live chat here, if you're watching with me live right now, we're going to drop a link here. This link right there, when you click this link, I'll show you what happens. So when you click this link, and again, this is I should just not underestimate or not understate how big this sale is. This sale, no BS, no nonsense. This is our biggest sale that we do all year long. This is the best opportunity. If you've been thinking about getting a copy of the EDGEFINDER, currently you're going to get it at the best possible price you could. So here's how you can get that. If you've been thinking about it, if you're like on the fence about it, this should swing you off the fence and get you a copy of this tool so that you can start using more data in your trading today. If you want the commitment of traders data, if you want the top setups algorithm, if you want macroeconomic data to use in your trading, again, level your trading up, get a copy. It's a browser-based software. You can use it from anywhere. It's a wonderful tool. And if you've been thinking about getting a copy, take advantage of our 45% off. We drop this link, click this chat now, click the 45% off 2-year anniversary sale. Again, we've been celebrating this month. The reason the sale is so big, we're celebrating 2 years of development within the EDGEFINDER. We've been working so hard. So many great people have been involved in building this thing. So if you don't have a copy, there's your offer. Again, I know it's a sales pitch, but candidly, it's an amazing product, and it's something that you should pick up if you've been thinking about it. So 45% off. Click that link that's been dropped in the chat there, and you can speak directly with someone on my team about getting yourself a copy of the EDGEFINDER. So there you go. Christmas came really early this year, as early as April. But again, I'm excited to get more people using the tool. Candidly, I always equate it to, like, if you went to a concert and you know how like the singer or the band is like really excited when people know the words to their song and they like sing the words for them. For me as a trader, I've been doing this for a number of years. It is that same experience I can imagine. I've never had people singing my song, but a similar feeling when I see people using the EDGEFINDER, improving their trading, passing prop challenges, making more money, being more intelligent with their trading, simply because they've added data into their trading. It is so exciting for me and for my team. So take advantage, pick up a copy. Let's keep moving. Look at this, guys. We're actually seeing some sell-off in the indices, at least for now. I mean, the morning here, New York session getting started, NASDAQ is down 1.22%. And if you're asking me, Nick, where are you buying these things? I couldn't give you an answer right now because, again, the software here, which I use for my confirmations, we're not getting anything for indices right now. So until we round out and we find some signals from the edge finder, I think we have room to sell off on this. If you're watching the NASDAQ, you know, we're hitting a trend line right now. And if that closes underneath, you know, shout out to Tori Trade. She loves this, like the trend line break signals that can generate. If you get something like that, right, we could see a little bit more of a continuation downwards. That being said, that's also asking the market to prove it, right? Because we're hitting a trend line, we're hitting a support level. We'll see how the market reacts to this level. We could just bounce right off this and be back up at the highs. It's totally possible, but I think that the market is due for a bit more of a correction. I do not have any trades in terms of shorting the NASDAQ or the S&P. I don't have any longs open on the S&P or the NASDAQ, but I'm just kind of, I'm what's the word? I'm like watching, I'm spectating for now. Is it better than Black Friday? It is the same discount as Black Friday. Again, it is our biggest sale, and I'm not kidding about this. This is our biggest sale of the year. So if you've been thinking about getting a copy, do not wait. You won't get a better price. In fact, I'll speak transparently too. By the time Black Friday rolls around this year, the Edge Finder, there's a good chance the price is higher. We're just adding so much to the tool. We're creating so many new features, and you know, with our costs increasing as well, the price usually goes up. So again, I'm not even as a sales pitch, candidly, it's probably the best chance to get the lowest price you can this year. Okay, so let's talk about the dollar. Here's your next thing here. The dollar index is coming down on the same day that the indices are coming down a little bit. That's kind of interesting. Now, what are yields doing? Yields are up. Look at this. I could have told you that because my TLT position. Oh, I want to show you guys my TLT position. Can I see my TLT position? Has it updated in P&L? Okay, that's wonky. Hold on. Sometimes when the stock market is opening up, Webull, in terms of options quotes, I think you have to get like live. I don't have live, like real-time options price quotes, I think, which is not really like imperative. I'm not like day trading options. It's very much swing trading, longer term stuff. But that being said, yeah, there we go. Okay, it just updated. Okay, so I am floating. Did you guys see that? Like, what is going on with this? Webull's options are so strange sometimes. Ignore this. This is the number we want to look at. So I've had my win streak might have just been cut here, guys. I've got two positions. I've added a new one. XLY, I sold puts. TLT, I sold puts. Both of those looking not so hot here today. So while gold and oil continue to rip, that's great. FXI doing great as well. I also now have two losers in my mean reversion strategy, which is TLT and XLY. Let's go look at that just for a second. So here's TLT, which TLT, you might say, oh, I don't trade TLT. Can we go back to gold? Well, this is gold's brother, okay? TLT and gold are like cousins or brothers or sisters, or I don't know. You guys can decide what gender or whatever TLT and gold are. My point here is this. TLT is bond ETFs, like long-term treasury bonds, okay, 20-year plus. The reason I show you this is that this will typically go up. TLT will typically go up when yields or interest rate expectations are coming down. Okay, so right now, why is TLT coming down? Why is my TLT position going against me? It's because right now, I imagine some of it is just risk-off sentiment in general, but also the PMI data was really solid, and that really solid PMI data is saying, yeah, inflation may stay sticky for a while, and that stickiness is making the yield market the jump up. That was the case yesterday, and seems to be following through here today. So of course, this is exactly the wrong thing for my TLT position. So I want to just bring light to something. I've had a win streak recently, and I've been vocal about the fact that win streaks do not last forever, and I will show you guys my losers and my winners. I will never just show you my winners. I find that to be incredibly annoying when people only ever talk about their winners. So here's my winners, gold and oil. Here's my losers, TLT going against me, and so is XLY here. XLY, I sold a put at 177. This has gone terribly for me right off the bat. But that's fine, because in my wheel strategy, without getting too complicated into options, basically I sold a put. I'll show you guys my position. I sold a put on XLY, okay? I sold a put at 177. So what this means is that by the 12th of April, if this put is in the money, meaning price is below 177, all that means is I have to buy the shares at $177 per share. I volunteered with this option that I sold to buy 1,000 shares at $177 a piece. It's kind of a big position, but again, it's an area of the market I wouldn't mind owning. This has companies like Nike, Amazon, right? If you're talking about Tesla, you're talking about Lululemon, right? You have lots of names in here. And this is an ETF, which, just long story short, XLY is an ETF. An ETF is a basket of companies or a basket of stocks. So I wouldn't mind owning any of these companies, right? I wouldn't mind owning Nike. I wouldn't mind owning Tesla. I wouldn't mind owning Amazon, Lululemon. So my point here with showing you that is that I have sold this put and it's very quickly gone against me, because what this has said is that the premium that I collected, I collected premium for selling this put. Why would you sell this put? You collect premium. So you can see in my trade, again, I'm going to try and stay brief because I know not everybody here is a big options fan, but it is a part of my strategy and my approach to the markets. And I hope somebody cares about it, but I'll keep it really simple here. So I sold it for 50 cents. My options were 50 cents a piece. So I sold 50 cents times 1,000 shares. So I am going to collect, no matter what, $500 on this trade. Even if the market goes all the way down and hits my, I have to buy the shares, I still collect $500 in premium. The other thing, though, is that I am basically also willing to buy the shares if price goes against me. If you're interested in option strategies like this, I use two strategies, a momentum strategy and a wheel strategy for option selling, okay? If you want to learn more about my option strategy, number one, I have a video on my channel. You can look up on YouTube if you want to learn more about that. Trader Nick space wheel strategy, like wheels on a car, wheel strategy. It is not something I created. It's not something I invented, but it's a strategy that I implement, I've learned, and I absolutely love having in my portfolio. Anyways, let's move on from that. There's other stuff to talk about. Oil is up still just about 1% on the day, and stocks continue to plummet. S&P 500, I should say, plummet is an overstatement if you're talking in the last 10 years, but in the last few weeks, this is a plummet, right? Because the stock market just hasn't gone down in a while. This is starting to become something. We're down 1.67% off the highs. It's slightly more than what our previous pullback was. This one was a little bit more. So again, are we going to get a repeat of these type moves? This is the question, guys. So if you're watching the indices today, are we going to get the same thing where we get about a 2% max pullback, right? Look at this. I'm just copying and pasting these distances. You can see that's been the pattern. We're about at that level. So if the narrative here is changing for stocks, we would probably want to, if you want to see stocks continue to roll over, then you probably want to see it crest this pattern, meaning like do way more to the downside. That being said, if you're a bull on stocks, you want this pattern to continue to reign supreme, meaning you want this dip getting bought quickly. And we'll see. The market's going to tell us the answer in the coming, days, most likely, right? So I just wanted to point that out for the traders who are watching indices. For those of you guys who are watching the dollar index, I want to come back to this for a second. The dollar index is pulling back here. Here's a 4-hour chart. It's been in a pretty solid uptrend here recently. Daily chart, however, we've just crested. We just beat out this level of resistance. The question is, was this enough of a breakout on the dollar index to really, create solid footing for bulls to continue higher? I don't know, because here's the thing. If you get like a fib level, right? This is a trick I like to use. Let's just say from this push, right? For there to be a 38.2% retracement, we probably would have wanted at least a breakout up to like 105.5, let's call it, for this 38.2 to be a very attractive fib level for a lot of traders. That's just a trick I like to use. It's not like a hard science or anything like that, but I'm talking about people often wonder, did we really break out of this level? I would say probably not. Sure, we traded slightly above it, but we didn't definitively break it, where I would say we definitively broke that level if we hit like 105.58, because that would say if you got that break, then you got a pullback, you're looking at a pretty attractive move, right? I care. I'm always learning. BMac, appreciate you. Thanks for anybody who stuck around through my options trading stuff. I'm very aware. I as a content creator, I see the analytics behind everything that we post. Option stuff doesn't usually get as much attraction, and that's okay. I don't talk about it as much on my channel. If you want more option stuff, I would encourage you to join our Discord. I share it all the time. EU, nice candle up. Let's take a look at the euro dollar here. Good old EU. What's going on with the euro today? Here's the 4-hour chart. Let's see. Do we have anything? Let's go major currencies really quick. Take a look at the good old fashioned major currency pairs. USD CAD getting bullish reading. That's new. Pound USD bearish reading, Kiwi dollar. So I want to look at these two, right? Actually, these three. So the only three currency pairs that are getting a strong enough reading on the EDGEFINDER right now, Euro USD is getting a neutral. So it's leaning bearish. It's close to bearish. A -4 is almost a -5, which is a bearish reading on the algorithm. So let's go look at these three really quick. For currency traders, we're going to look at USD CAD really quick. This is a bullish read. So for me, I'd be looking for, bullish setups. Probably not really interested unless you get a breakout here, right? Breakout pullback could be interesting on dollar CAD as long as it continues to have that EDGEFINDER scoring confirmation. Let's look at pound USD. This is one that I'm actually kind of interested in. Pound USD, really strong break to the downside here. And we could probably get a little bit more in depth here. Take a look at like this 4-hour chart. So that 50% looks pretty good. So we're looking at the 4-hour chart, guys, and I'm going to switch this to a supply level. So for those of you who are watching the pound, I'm just going to delete this level. It's kind of irrelevant to the 4-hour setup here. So 4-hour chart looks actually pretty good. If you do get a bit of a reversal here or a bit of a pullback, that 50% retracement looks pretty interesting to me on the pound USD. Looking left, we have two pivot spots here. But more important than the technicals, like I said, as always, the EDGEFINDER is way more valuable in my opinion, than the technical chart. Technical chart can be really deceiving, really misleading. And if it doesn't have like a fundamental bias, I'm really not very interested. So that being said, pound USD, why is it getting a fundamental bearish lean? Well, look at the economic data, guys. Look, so let's go through it really quick. GDP favors the US. Manufacturing PMIs, we know that favors the US because yesterday you had super strong US PMI data for manufacturing. Services, about flat, not a strong bias there. Retail sales heavily favors US. Inflation, the inflation situation favors being bullish the dollar over the pound right now. Employment change favors the US. My point with showing you guys this is that when we take trades, we're not trading it just because you had a fancy chart pattern, right? We're looking for fundamental stories, real economic data that could drive this currency pair one way or the other. So if you're watching the pound, I like the sell side. The EDGEFINDER's been calling for sell setups on pound USD for some time. In fact, just to show you, let's go test that theory. When did the EDGEFINDER first start being bearish pound USD? Okay, your first bearish signal for pound USD, remember we -5 or greater to the downside, March 22nd. Okay, so let's go test March 22nd. This is the historical, by the way, it's a historical score indicator for the EDGEFINDER. You can find this under EF score indicator. Okay, March 22nd was right here. Okay, so right around this area, the EDGEFINDER shifted bearish, which of course, after this big move, you might say, oh, the EDGEFINDER missed that big move. But I don't really care to make every single move be like you don't have to catch every single move. The point is it got bearish here. I think that was actually a very, very good signal. right? Because it progressed, it gave you some time here, waited a little bit, consolidated, but then it's broken to the downside beautifully. And again, what got it to be strong to the bearish side? The fundamentals, as we just walked through, right? The economic data started leaning heavily towards the US dollar over the pound. So that's how the Edge Finder kind of works. Again, just a reminder, if you've been watching here for a minute, we are currently doing 45% off the Edge Finder. If you shoot us a message on our website, the link for that is being dropped in the chat right now. If you send us a message, someone from our staff will get you hooked up with that discount code and give you any information that you need. If you've been thinking about the Edge Finder, send us a message, ask your questions, whatever you need, we're here to help. So again, we got people on standby who can get you some information about that. Which strategy do you use? I use two strategies, a momentum trading strategy. So like, for example, this idea is a momentum-based idea. Same thing with my oil trade, right? I'm long oil, I'm long gold. These are momentum trades. Look at that. Gold is making a move here today. The same day that stocks are moving lower, we got gold breaking out potentially. That's a bit of a risk-off move if I've seen one. Not to mention, guys, look at the VIX. There goes the VIX. The VIX is up 11%. Are we finally seeing a bit of a pullback coming into the picture? NASDAQ down 1.4% on the day. S&P down just shy of 1%. I mean, these are real sell candles coming in. Again, VIX up 11% tells me more than anything else. That's unique. We have not seen a spike in the VIX like that in a minute. You've seen these 10% moves that come over a period of a few days, but to see it up in one single day, up 11%, last time that happened was like mid-February. So we're finally seeing, it looks like, a little bit of a change in market nature, and that's being accompanied with rise in the price of gold. So pretty strong stuff here this morning, guys. In terms of gold scoring, still neutral. But again, I've got positions from when the Edge Finder was bullish. I've pointed this out. We can always play around with this. I love this indicator. I can go to gold here and show you guys the initial bullish setup from gold was February 24th. So I'm still in those trades. So I've been in that trade for some time. Obviously, that's over a month now that I've been trading gold. I took two different gold entries. My first trade was back right around with the Edge Finder first signaled. Then the Edge Finder surfaced another setup over here. You can see there's buy number 2, buy number 1, buy number 2. Here's GLD, just to show you guys I'm not just saying things. This is my real position on a live US regulated brokerage. I don't show that to brag. I show it just to be transparent. I will also show you when things are going poorly. Again, I like to balance it out, and I don't like to just show you just the good stuff. So let me show you some rough stuff here this morning. XLY is probably really moving against me. So yeah, look at this. XLY, I sold puts yesterday, worst possible timing. In fact, if Frank can hear me right now, he should feel so glad, because he was thinking about selling a vertical on Nike, vertical puts, I guess, something that was, he probably has such a better opportunity to do that today than I did. Because look at this. Look, there's Nike down 1.3%. So he missed that completely. Frank was like, I'm going to wait. And he made the right decision, and I made the wrong one, because I sold XLY shortly before the close yesterday, which ended up being just the worst possible timing ever, because look what happened. The market dropped here on XLY, another 1.76%. But, you know, I'm fine with it, because if the market keeps dropping, I would actually love that, because then I could get filled in some of the positions that I've been waiting on the sidelines for. XLY is an area of the market that I kind of like. It's the consumer discretionary. I mentioned this earlier, but yeah. What is the VIX? It's a volatility index for the options market. It's kind of a complicated explanation, but it in long story short, the VIX shows volatility and kind of by proxy fear in the market. So yeah, Edge Finder is actually early for swing traders. It can be really, really good stuff. I'm telling you, it is not always right. Again, show you a loser right now. Let's go look at US 10Y. This was part of the reason. So look at this. Here's an example of a trade that's not going so hot for me. I sold puts on TLT, essentially by proxy, a bullish position on bonds. And you can see that this one is not looking so hot. Down another 1.10% today. So this one, not such a great signal from the Edge Finder. So again, and I show that just because I don't want to come across as like, oh, I'm only ever right, because nobody is always right. I am wrong, and I have losing streaks just like every other trader on planet Earth. The other one, so XLY, TLT, both of those not going so hot. Oil pulling back a little bit here. Look at this. Oil had a huge jump in the pre-market here, up 1.5%, now giving back 0.9%. Oil is very volatile. I have mentioned that I need to trail a stop. I'm going to go ahead and do that here. News in just a few minutes though, so let me be quick about this. I'm going to trail my stop loss on USO. So from my initial entry, my stop loss is going 82.44. That is 2.19%. 2.19% into profit. So let me go ahead and adjust that. 2.19% is going to put me at 78.14. There it is. I'm going to go ahead and trail this stop, guys, for those of you who are in the room, the Discord. Good till canceled, modifying that. So I'm going to go ahead and just do that really quick. Again, while I do this, let me just remind you, I said this earlier, but our 45% off sale just kicked off for the EDGEFINDER. If you want to trade using the same tools that I do, this software is a remarkable piece of equipment. If you're looking to improve your trading by getting more data in your analysis, take advantage. Our 45% off sale. We got people standing by who can hook you up if you send us a live chat right now using this link. There it is. It's on the screen. And as we speak, I'm going to go ahead and trail this stop quickly, guys. So commodities, I need to trail my US oil position here again. So let me do this. I'm just going to reply to this message in Discord. Whoops, what did I just do? I don't want to make a thread. Let's go US oil. Reply to this. Reply. Okay. Okay. Entry is the same. Stop level on the USO position is 78.14. My initial entry is still the same, but then I also need to do the CFD, the spot price of oil as well. With my trades, I share both the spot price as well as 82.45, as well as the ETF that I'm trading. 82.45. Okay. There we go. Okay. Just fix my little formatting here. Here today as we break out through resistance. Okay. I'm going to do that really quick. I'm just going to hit, well, I got to screenshot this really quick here, guys. So just bear with me. We're about 2 minutes out from news. I'm trying to race against the clock. Okay. Screenshot is in. All right. Oil update is in, guys. For those of you who are on Discord, and check what James has to say. Okay, appreciate that, James. I saw your message. Okay, so guys, we're just very close here now to JOLTS job. So let me transition just to get set up here so that we can react to the number. I'm going to go ahead and switch over to all markets so that we can see everything coming in here as JOLTS numbers come out. Will JOLTS save the sell-off? We'll have to see. Again, 10 a.m., about 1 minute away. Okay. All right, again, JOLTS coming out 40 seconds or so here. Quick update in terms of what you're looking at. You got indices over here. The dollar index here center. That shouldn't be TLT. Why is that TLT? Euro USD. Let's save this. Gold, top right, oil, bottom right, pound, and euro here. So you got everything you need here. We're about 20 seconds out. I'm going to go ahead and really quick roll our breaking news screen. All right, guys, let's see if JOLTS does anything here this morning. Not expected to be a huge move, but sometimes a surprise can come along and move stuff. So let's see. All right. Initial reaction, nothing too significant. Euro dollar back near highs of the day. S&P, look at that NAS fresh low on the day. Gold near the highs. Let's see what the number was. Expecting 8.76 million job openings. Let's see what we get. German CPI. Oh, that's interesting. Okay, came out pretty much actually as expected, 8.76, which is matching forecasts here. The market reaction here so far, the dollar index down slightly here, NASDAQ down, S&P down, US 30 down, Euro taking out the highs here, pound USD taking out the, well, not the highs, but pulling back slightly off the highs. And gold still resting up there around 2265, really making its move. Commodities are just really hot right now. Meanwhile, indices are selling off. So we'll see. We'll see if that can continue to be the case. I would love it to be, because again, that's kind of what I'm positioned for. But we will have to see. Real quick, guys, we're going to thank our sponsor, and then we're going to bring in Chris Pulver to the conversation. You guys know him. You love him. He comes on a couple times a week here, and I'm looking forward to seeing what he has to say. But before we do that, we're just going to thank our sponsors who make this show possible financially. Of course, there's a lot of people, costs associated to this stuff. So stick around. We'll be right back with Chris just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we're back with Chris. Hey, Chris, how's it going, man?
What's up? Blood in the streets, Nick. What's happening?
We might be seeing, well, I'm just not used to this. I didn't know that these things could actually go down on the day. I thought they would just go up every day. But Chris, the question is, I was making this point earlier. We've seen this pattern several times where you get like a 2%, just shy of 2% pullback, and then the market kind of rips back. So the question I have for you is, this time different, or is this time just kind of deceivingly perhaps just another move like that? What do you think?
Well, we're going to see based on today's close. I was actually looking at the numbers right here. I'm just watching, 0.83% to the downside on the SPY. The QQQ is just under one, or just beyond the 1% mark of 1.25. We're starting to see some wick lows right now that are being left. Let me actually check some gamma levels and open interest levels really quickly. So I think you're right, based on this is what the market's been doing quite a bit the last 4 or 5 months. I mean, any pause, any dip, 1 to 2% at most has been our pullbacks. I would say, though, we are vulnerable below 518 on the SPY. If we have a nice solid red candle with today's gap, and we have a big fat red candle where we do see 1+% on the SPY, maybe 2+% on the Qs, I think that's going to do maybe a little bit more harm and damage, and that might ignite some additional selling to the downside. But to me, like I said, 518, if we close with the body of the candle below 518, I think there's more to come to the downside. Let me check a couple levels here. I mean, that just leaves us with a big gap today. That's SPX. Let me try to SPY's a little bit easier to kind of read sometimes in the morning. My levels. So, all right, let me float this out here. This is pretty interesting. So the big levels already today, this is pre-market. We've already exceeded on the downside kind of the expected gamma levels for the day. So doesn't mean that we can't stay there, but it means that typically I don't see a lot of price action without having a snapback. So I'll go into real time here in just a moment, but basically we gapped lower than all these expected levels for the day. And so your big, money movers out there are probably looking to kind of cover their butts for the remainder of the day to get price back into this range. So the damage would really be done if we stay bearish and we, push below 517, 516. But if we go ahead and just close back into here, I'd say it's a pretty contained sell-off, just judging by what I'm seeing on my charts.
Yep. No, I think you're onto something there. We'll have to see. Again, I kind of agree. Depending on the close today, we'll tell you a big kind of story, I think. I would really say if you get like a 2% correction in the S&P 500, like actually closing, because we've seen like this move like down to 1.8, 1.7, and then the reversal kind of sets in. I'd say if you actually get a breakout, and it could be today, it could be tomorrow, if you actually see a closure under 2%, I think that would start to signal to the market, okay, this market actually wants to pull back, and it's not just another kind of blip. But again, we'll just have to see. It's not something I'm betting on, like I've said, many times. I'm not betting on that to happen. I'm just kind of waiting to see if it will. And in the meantime, you're seeing some more interest rate sensitive stuff get hit today. You got the Russell down. DAX is also selling off for the first time in a while, which is an interesting one. Gold continuing to rip despite that. Really interesting stuff there, because again, the interest rate stuff is up. So, yields, you got 20-year yield up today, 10-year yield up, 2-year, and the TLT position that I'm in has moved against me now. So that one's in the red. I also, I was talking about this earlier, Chris, I sold XLY puts at the worst possible time. Sold it yesterday, right around the close, opened up today down 1.65%. My strike price is 177. So I honestly wouldn't mind owning this in the account though. I'm cash heavy, so I would love to get filled on some of these names.
Sure.
You got Lululemon, you got Nike, Amazon, Tesla, you got plenty of companies in there that I would like to have a piece of. So we'll see. I would actually very much welcome getting that assigned to me. So we'll see what can happen there. What do you, what's kind of on the position watch list for you, Chris?
Yeah, I'm monitoring some of my volatility plays. So the VIX is up around 17% the last couple of days. Is it possible that the VIX spikes up towards the highs of 18? If so, we'll probably have additional selling pressure. The positions that I have running right now, let me increase the font size so it's a little bit easier to see. I've got positions going out to next week because I just thought with this week's expiration, we may or may not have the volatility to time it by Friday. And so on my Dow, let me just use this account here just to show. So on the Dow, the DIA right here, this is, it's a play that looks like this. So basically, there's my zero line. My risk is right here. And if price zooms a little bit up or down, right now we're in the downside, and then I max out my profit. So it's just an options play. It's a reverse iron condor. This is where my loss is if it stays right in the middle. But you can see my strikes here. So I have a 393 put and a 382. So right now my put side is up around $2. This debit was around $4. Well, I'll show you what it's trading for. I think I got into the trade. Let me double check my values here. So I got into the trade for a $5 debit. And right now, if I have all 4 legs, it's trading for just under 5, I think. 484. So I'm upside down about 20 cents on the trade. But if I look at my QQQ is right here. Similar situation. I've got a 445 put. This one's up over $6. And then I also have some value left in the call side. So this one's trading for 774. I got into this one yesterday at 691. So it's up about 80 cents right now. And this is why I'm saying if we had like a 2+% sell off on the QQQ, this is probably trading for $1.50 to $2 a profit. And that might be enough for me just to take the profit and be done with it, not worry about it. Versus, I mean, again, with a trade like that, let's go to the QQQ. If we have the market looks vulnerable after this, peak around 449, leaving a gap right here, coming back into retest it. I was talking to Frank about this yesterday. I think that, the levels here around like 430 or so, if we can have an aggressive day lower, I mean, maybe one more day can put us down to this 430 to 432 floor. For me, that position I have on the QQQ right here is awesome because a 445 to let's say 430, that gives me $15 of value on that position for a $7 debit. So I'd be up $8 in profit for a $7 debit. I would take that all day. So I don't know how aggressive I'm going to get on the profit taking, but like I said, I think I'm watching to see how ugly things get today. It's been a while since we've had that 1.5% to 2+% sell off in a single day. But if we get it, I wouldn't mind taking the profit because it's going to be across the board for me for DIA, SPY, and the Qs. If I can close out my accounts will probably be up a couple $1,000 each. I'll take the profit and call it a day.
Yeah, it's interesting, Chris. I mean, it's a risk off day out there because again, you're seeing yields jumping up. You're seeing gold also up. That's already kind of a weird one. The VIX up shy of 11%. As you know, Chris, I'm loving that because I want to get back into some of my wheel approaches.
Yeah.
So I might take an opportunity here today to start looking at some of the areas that are on my watch list for my wheel strategy, which has been dormant recently. So FXI also is surprisingly holding in there for me. That one's up 1.33%. Kind of interesting, Chris. The Chinese stock market, there's not that much correlation to U.S. stock market stuff. There is, but there isn't. Like it's not like the FTSE in the U.S. market or the DAX in the U.S. market. It's because of course it's not just Western ally stock markets. It's a different component to the world. So kind of interesting. FXI making that push here. And again, I told you my covered call is at $25. So I could get taken out of this. This is my current position. Up on the shares, still slightly up on the premium from that, just because I've held this one for a minute. This was a monthly call that I sold back at the beginning of March. So we'll see. But I also wouldn't mind if I stay in it and lower my cost position. Same thing from yesterday. TLT, like I said, going against me there was a beautiful thing here, and then completely Uno reversed on me. XLY, worst timing of a trade that I've had at the minute. But point is, Chris, I've been on a bit of a win streak, and I've been trying to really showcase when it doesn't go right, because as people will know, or will come to find out, you can watch people on social media and they can choose to show you what they want to show you. But it's really important to just understand, like when the tide goes in your favor, it's a lot easier when it goes against you. So just wanted to share that thought today.
Yeah. I mean, I can do the same thing. My account's sitting upside down 10 grand right now. So it's just a little bit of a pullback. I mean, a lot of these accounts I just had the last couple of months, this started at 259. It's up to 264. This one started at 200 or 200,000. It's at 205. 250, it's at 253 and change. So I mean, a lot of these accounts are up with their balances, but for the day, it obviously looks pretty ugly.
Sure.
But again, I mean, if I like yesterday, I took a nice little profit on GLD. That's another one I'll be looking at for some potential reentries. And then again, the indexes, if those pay out, quickly rather than waiting all the way to next week Friday. I'm still, Silver and Nick might be one of my better positions running over the next couple of months. SLV is my exposure, but looking at it, I do have a silver futures trade in right here. Just out of the money bull put spreads. That's closing out for most profit by the end of the month. But SLV is the one that I'm pretty excited about because I've got a long call at 20, which is up $3.37. It's just true value on the option. I only paid about $3.90 for the trade. So what I have right now is I'm in for let's say my break even is, I'll just say it's 23. Get out of here. What's going on here? It's $23.90. So 23.90 is my break even. If it gets called away at 26, I make $2.10 on 1,000 shares. So I make $2,100. Now, my goal is, if I look at SLV, and another thing, I really like FXI. I actually want to go out to this. Let me come back to FXI in just a moment. But if I go to SLV, and we're looking at this breakout level, it's right on the cusp. I mean, if you go to XAU or XAG, two things. XAG, if we break above 26, that's where I've been looking to get confirmed bullish. If you go to gold versus silver, for the last, I was going to say today, literally like 20 minutes ago, I looked at this. This was a big fat red candle all the way down to the wick low. Right now, it's
gold a little kind of snapped back in there. But I see where you're going with it. Yeah, it's nice to see
silver outperformed
silver playing ball too.
Yeah. So on SLV, so I'm long at 20. Now 26 is, so XAG is the break at 26, but SLV is a break here around 23.50. So my 26 is up here, allowing this thing to break and go a little bit higher. If I can, I would like to roll this out and up if possible to stay out of the way. I don't want it to be a debit. I wouldn't roll it for a debit unless it's, for every $1 or $2 I raise it, I'm only paying like 25 or 30 cents debit for it, because I do think this has good upside potential. Just like, look, it's pretty simple. We were long on XAU and we had the moves measured, and here we are today talking about it. You've got your target at 2280. I got a target at 2270. We're there. And so, I mean, this is why I took profit yesterday, because I thought a lot of trades that I take that are going my way, I say it's good enough. You know, I
Yep.
mean, that
No,
level is 210. That's actually above my sell call that I had. So I'd actually be upside down 25 cents in the sell call. So I mean, I'm not that upset. I'm a little upset, but I'm not that upset that
yeah,
I
sure.
profit yesterday, you
Well,
know.
Chris, that's the thing is, as we talked about this, we've had this ongoing campaign where we talk about metals because everybody in the audience just loves it. It's probably a top pick in terms of one chart that you could talk about endlessly here. It's
Mhm.
gold, and everybody loves gold, both U.S. and non-U.S. But I wanted to also just recap some of the numbers here we're getting for the people out there who are wondering, kind of latest news. Yesterday we had PMI data, and I don't know if you checked these charts out before, Chris, on the EDGEFINDER, but Frank and our developer have done a remarkable job with these charts. This is basically, I just wanted a simple show me forecasts, actual numbers, and revisions, like on one single chart for the things that I want to look at. So, like ISM manufacturing PMI came out. We've got, the forecast in red was expected to be 50 point. I'm sorry, not 50.3. The forecast, we can hover over here, was expected to be 48.5. It was
Yep.
expected to be a slight improvement. We got a positive number yesterday. That was kind of what shook up the markets to start out April. And so that was a kind of a picture from yesterday. We had PMIs beat positive territory. We talked about that yesterday, first time since October of 2022. At the same time this morning, haven't finished this chart. You can see this one's coming too. We'll have the revisions and all that stuff as well added at some point. But you can still see a trend in job openings kind of slowing, right? Here's going back to February of last year. You can see the job openings slowly diminishing. And, that's the thing, Chris, too, that could be something also to pick up on is, are we going to see a pickup in unemployment claims? Are we going to see a pickup in unemployment rate? We've sort of started to see a bit of that trend. But I think things get interesting, Chris. If this keeps going, you got jobs data this week. If we
Mhm.
see a tick up to 4%, what does that do to the markets? Does it freak out the Fed and maybe rate cuts are coming for a different reason? What do you think?
That's what it potentially leans on. One
Yeah.
kind of staggering fact that's we've all been talking about this the inverted yield curve, and that means a recession. And there's this big window between like 12 and 36 months, and the average is around 24 months. That's a big window to be, hey, I was right about the recession, right? But
Yeah.
one that tends to take a little bit of a faster effect would be a 1% increase in unemployment through a year. If you have a
Mm.
rolling 12 months and you have a 1% increase in unemployment, that tends to mean recession is right around the corner, a little bit faster reaction, which could be, like you said, the Fed reacting to that a little bit more aggressively and cutting
Hmm.
rates for arguably the reason that we wouldn't be wanting to cut rates. It's like we're cutting rates because we can and we're more restrictive, inflation's coming down,
Sure.
versus cutting rates because now things are softening to the point where the Fed, and this is what's kind of wild, is not very often do we see the Fed right as far as smooth landing on anything. And so
No.
this whole like soft landing, no landing that we've experienced the last, 12 months, it wouldn't surprise me if we have more of a crash landing in some capacity. And then this employment stuff could be the factor that really makes it known where the Fed
Yeah.
has to overreact and do something. And this would be
Yeah.
probably that
Well,
overreaction.
it scares me, Chris, that when everybody just gets too optimistic, and again, that's
Yep.
not always a wrong indicator either. So I don't want to come out as the ultra contrarian. Sometimes the crowd is right. Like you
Yep.
do have like 1995 where the Fed pulled off a remarkable soft landing and it led to just the strongest rip that eventually bubbled in 2000, 2001. But you had 5 years in there where the thing just went crazy. So it's not that it has to be a terrible situation, but I do think that even if you think that the Fed can pull off a soft landing, I think you can get yourself in some trouble chasing alongside everybody else. Got to wait for those pullbacks to at least better your risk to reward story. I also think, Chris, that I'm going to double down on our thought process. If I had to pick one of the indices for the rest of the year, I think the Dow's looking attractive.
Yep.
I think if you're going to see a pivot into rate cuts, again, I was talking to my dad about this, just about the sectors that typically perform, and Chris, I didn't even know this until this morning. XLE, or yesterday actually, XLE is like the top performing sector of the market this year so far. That's a defensive usually area. XLE
Really?
is on fire. Yeah, I mean, with oil prices jumping, take a look at this. I mean, you're talking about that sector being up almost 15% on the year so far. Now that might be beaten by like SMH or something, but I'm talking about just kind of like actually, is it? I don't even know. It might.
You are correct. Year to date, energy is up 13.47 versus communication services up 13.25.
I mean, yeah, and
Wow.
you could pick and choose like certain ETFs, obviously like SMH 26%, which is crazy. But you're talking about like the big S&P sectors,
Uh-huh.
and they creeped in there, Chris. That was not something anybody's talking about. And here's energy. You know, is healthcare gonna outperform? Or utilities gonna outperform? That's the question for this year, and it's not something that usually is accompanied with good market performance. Usually those are tougher times, but I think just a corrective move across the market for a few months could lead to some of the more defensive areas doing just okay.
Yeah. Well, I'm looking at the last month. Just so year to date, you're right. S&P is 9.94. We're getting a pullback here. Communication services, which we've seen a little bit. That was just the aggressive move out of. If you take a look at the index weighting here, I mean, Meta's had a great year,
Yeah.
plus Nvidia, those two alone. But yeah, Meta's a huge outperformer, and Google. Google came back from Google was looking like Apple a month ago. It was down to
Yeah.
130, now it's up to 1. I got a chart alarm yesterday. I think it's at 170, 180.
Yep.
Is that right? And
Google's performance
Google is trading at 150. Okay, it was down to
at
130 up to
153. Yeah.
153. But we're back up to these highs again. Apple doesn't look this way at all,
No.
right? Apple's still sitting around 170, and we're wondering like, what's Apple going to do? Is it 169? But I think we're putting a bit of a floor here in Apple. I'm long on Apple, out of
Yeah.
the money both the spreads, and I like long. I thought, man, if there's a way, I think I said this to Frank yesterday. If Apple on the weekly chart pulls back to we're right here. I mean, on the weekly chart, I mean, Apple going into 2022 looked a lot like the S&P, right? We had a correction. Right in here was 2022's correction, almost mirrored the S&P. We had the rip. Just Apple hasn't participated the same way. But I could see if we're going to break this level, then I could see some major support coming around the 150 handle on Apple. But if we hold this current support, we just have a range. And Apple, holds 170. Maybe struggles to get above all-time highs, but probably from 170 to 185, 190 is still back in the game as far as maintaining and not really making the sell-off even worse. But I wanted to talk about Meta, and we're sitting here at these overbought conditions with this crazy run-up post-earnings. I go back into this sector here. This is today's heat map. That looks pretty awesome. But no, utilities has come out like really, really hot the last month or so. Just in the year to date, you were right. The energy sector is now the leading sector of the S&P. But you go to 5-day, check out utilities for the last month. 5.72. That's a scream of a move on utilities, which does start to beg positioning, or starts to look at some positioning where there might be some big money positioning around risk off. If you're going into consumer discretionary, going into utilities, and these are starting to outperform, or I'm sorry, consumer staples, not discretionary. Yep. So if you go into staples and utilities, that's really your defensive sector, and your rotation out of your cyclicals. So the one thing that has kept a lot of things floating is consumer spending, and that might still be the case, but obviously it's not going to take much to have people tighten up a little bit. If the stock market starts to drop aggressively, and we're already seeing some volatility. I want to say the SPY tapped over 1% to the downside today. Now it's pulling back. The Qs, like just a few minutes ago, were 1.45 to the downside. Now they're 1.33. So I'm still going to look and see if there's some, I don't know. I guess I'll say this. I want to see more downside just to have a little bit of a purge and a cleanse. The faster it happens, it's fine by me. I don't need this to all of a sudden break down and fill the Nvidia gap. I don't need this to do anything other than let's just have a 2 to 3% correction, a 3 to 5% correction, and then let's see where the bulls are at. But to have 1%, 1%, half 1%, pause, and there's just no real pullback to trade. That's challenging. I mean, if you're long, you're fine, but it's like I don't know how much longer we have to go before this thing seems like it's broken. And for me, it takes a lot to test my patience. Where I'm like, I guess I'm wrong. Yeah.
And Chris, look at this as we speak. We just hit a fresh all-time high on gold yet again, up 1% on the day. We're trading at 22.75. Chris, we might be right at the we're hitting the that yearly target that I think we both talked about. You hit yours. Mine was just $10 shy of yours, and we're very, very close. I won't take profits on that, but that'll be my cue to just to trail stops. I like to just trail and let the trade run. But really crazy I wouldn't have guessed it would happen this fast. That was like my year-end target. I thought we would drift up,
Sure.
maybe spike during the elections. I was wrong in when it would do it, but I was, I guess, right in the general direction. So, and again, as you pointed out, silver. Love to see this move in silver. I would love to see it break into the 26s. We've both talked about that. Would be very healthy for the metals world. So we'll continue to monitor that. I also just wanted to say, for those of you guys who are hanging out with us live, Chris has his own YouTube channel. I'm going to step out here and let him do the show. Stick around with him. He's got tons of knowledge to share with you guys, go through all of his different charts and things that he's looking at. He's going to take over for a little bit. His channel's been dropped in the chat here. And remember, if you guys are thinking about getting access to the Edge Finder before the sale ends, it's 45% off right now. If you send us a direct message, someone from our team can answer any questions you have. Again, we'll drop that link in the chat right now as well. You can take advantage of our anniversary sale. So with that said, Chris, you got the show from here. Thank you very much for taking over, and we'll see you back maybe tomorrow.
All right, thanks, Nick.
See you, man.
All right, bye. So a couple things. So just to recap, I mean, it's awesome to see gold making on all-time highs and pushing higher. The one thing that I would say my takeaway from that is I just took profit on my GLD positions. I'm still long on the miners for GDX. But what's nice is I don't feel like I have to chase silver, where if I get into gold right now, if I'm playing GLD once again, or I'm playing the miners at GDX, or I'm playing any gold futures, to me, it feels like I'm chasing, and this has moved quickly enough. I mean, gold has made a run just since February of this year. This has made a run of about 14%. That's GLD. Let's go to actual XAU USD. And I mean, you can see that we look a little parabolic, and it's not a bad thing. I think Nick has it spot on by just using a trailing stop loss. Yeah, we're on 14.6%. That is a big rip. You know, I mean, this entire range, by the way, this entire range from low to high, if we go from this low to this high, that's around 28%. So that's why I measure this as a halfway move. Our full measure move would be this high to low. That's the halfway point. That's the full. So this is your, let's just put half right here, and we're there. So we're checking that off the box, and then this is your full point move up towards 2470. Now, I'm not saying that we can't just keep going parabolic. I certainly would like to see a pullback on gold before I start to reposition and get long. I am still bullish on it, but I want to find a better way to trade it outside of getting position at the highs. So what I'm saying is silver to me is a little bit more attractive at the moment because it doesn't feel like I have to chase. There's still a breakout waiting to happen. And once we get confirmation, a breakout here has momentum to the upside at 30, has momentum to fill this swing and get from a low to high that pushes to symmetry around $34, $35. So for me, I'm probably going to focus a little bit more on my position with silver, and then wait for reentry on gold. And with the QQQ dropping, one thing you have to understand, pullback wise and correlation wise, is as nice as it is to see gold heading higher, guess what's not heading higher? Bitcoin, right? Everyone thinks that Bitcoin is so correlated to gold and it's becoming its own standard. Bitcoin is more correlated to the NASDAQ. So with the NASDAQ selling off, you can see the Bitcoin is selling off as well. We're not at the highs at 74,000. We're at 65 and change. I did this with just looking at a measured move here. I do think that 1, 2, 3, 4, 5, even if we're going to go sideways, there's a pretty big range for sideways price, 74,000 highs to 60,000 lows. I also think we can make a stab at fresh lows right in here and just have a little bit of a correction. So I've been talking about this for the last month. Anything below 60,000 and somewhere between 60K and 50K. I know that's a big window. I'm not looking to be super precise, but if I'm long between 60 and 50,000, and my year target or whatever, longer term, I'd say that Bitcoin, spot price gets to 100K, I'm happy positioning in there. I mean, if it's 60K, it goes up 40%. If it's 50K, it goes up 100%. Or what's the numbers from, if I go up 40K, that's like 80%, right? So if we go 40K out of a 60K move, that's a 66% profit. If we go up, let's say I get in at 50K and it goes up to 100, that's 100%. It's a huge difference in gains. But for me, precision wise, I just want to have a little bit more of a dollar cost position around that 60 to 50K. And I hope it cooperates. If it doesn't, okay, fine. But that's what I'm looking at right now. And I did want to share this. I've got some pretty good stuff running on my end for some profits. This is what's happening in the Forex land. I know I talk a lot about options here, but we have a lot of currency trading as well. And I just have a bunch of positions running. You can see them right here. I am looking at this morning. I think I did the math on these. It was up like 1,600 pips of profit across the board. And then I've got another portfolio that I built out. This was starting in September of last year. And I started this account. So I built this class for a reason. I built a class that I said, look, I'm going to take a $10,000 account and my goal is to double it. I don't know if it's going to take a year, take 2 years, but I'm going to do it with a really simple process. And that is position trading and investing in the Forex market. And I do that through this year is, so 2023, we started to experience positive swap once again for the first time in like almost 9 or 10 years. So I positioned a lot of this portfolio around the Swiss franc, looking for Swiss franc weakness. And this is what it looks like. So the pre-summer push is cooperating really nicely. Gold is up, so the Aussie's getting some love. Swiss franc has been one of the weaker currency pairs. They're the first central bank to really start cutting rates of the majors. So I think the Swiss National Bank is opening it up, the floodgates for a little bit more of the cut cycle, a little bit more dovishness to kick in. So don't be surprised in the coming, let's say the coming weeks, the coming month or two, that the ECB cuts rates by 25 basis points. Maybe the Bank of Canada, the Bank of England cuts rates by 25 basis points. It doesn't mean that it's the right thing to do. Central banks are notorious for reacting to things and kind of breaking things first, or watching something break and then reacting to it. But I'm loving the positive swap and getting on the Swiss pairs, and it's nice to see that since they stepped in and cut first, that we are seeing a weaker Swiss across the board that's helping my position. So I got another little injection where I think last week I did the numbers. I was up like 6,100 pips just floating P&L, and today I got another chunk to the upside because we're pushing Swiss franc weaker. So again, Forex trading has been a lot of fun. It's been pretty much hands off because I've been positioned for this with levels, and I'm doing buy limits and buy stops, and they're all over the place. And I probably have I can show that platform again. If I go to my trades, you can see that I have a lot of positions. I can't really do it by tickets because they're all over the place. But somewhere, I'm just going to roughly guess here, but 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, I can say this, roughly speaking, I'm taking a lot of my positions out. I'll give you a rough estimate of how many trades I'm in. So let's see here. I'm going to ballpark this. This is about 7 trades on the Euro Swiss. And these are all open positions. So I've got about 7 trades running on the Euro Swiss. Most likely 7. Actually, I think I have like 14 running on the dollar Swiss because those are all micro lots. So 14 on the dollar Swiss. Pound Swiss is 4. It's actually more than that. I did 700 units each. I'll just say it's 4. Aussie Swiss, that one's at 2,000. That's 10 trades. CAD Swiss is probably 8 trades or 9 trades. And New Zealand CAD, that one is, I want to say 1,500. So that's 5 or 6 trades. And New Zealand Swiss is running for another 9. So I'm sitting at 59 trades roughly open. And this is what the P&L looks like. So lots of profits, lots of green. I don't have a lot of drawdown, which is obviously great. I've only used about 27% of the margin on this account. I've got plenty of firepower. Plus my account is growing. My cash position is growing as a percentage. If it was a $10,000 account, I'd only be using about 27% of that margin because my account's sitting here at 11,380. It's more. I'm actually like less on my margin used as a percentage. So that's good. That means I have dry powder and my positions can keep running, and I'm just going to keep monitoring those. So that's been fun to check out on the Forex side of things. A lot of positions. I know it is, but that's how I trade. And here's what makes it easy. So that's a lot of positions, but what makes my life easy is through my broker platform. Check this out. I just click on positions. This is what I really need to monitor because I have 60 positions running, but right here it gives me, here's my currency pair, here's my total trade size, here's my break-even price. This is really the most important thing right here. My break-even price. As long as I know my break-even price, that shows me my profit in dollars and pips and percentages. But as a trader on my charts, all I'm really looking for is, let's go to dollar Swiss is a good example as kind of a barometer. So we're going to pull back on the 1 hour time frame, totally fine. But on the daily time frame, I'm still going to hold long on the dollar Swiss until we hit this level. Until we hit this level here. So if I get a dip or a pullback, I'm going to buy it because a dip or a pullback to me means another wave structure to the upside. We head up towards 9,200. My position that has a break even of around 88.50, if I take that to 9,200, okay, or let's say 9,250, then I'm looking at about 400 pips of profit on 9 or 10 positions. So I mean the pips add up, and this isn't about like, oh, look at all these pips. It's really about what am I doing with my account. I started at 10. I've got positive swap that's already up to 320 bucks of profit, and now I'm floating another $1,000 higher in profit, and I want more. My big chunk of profit first is probably going to be, I don't know, maybe 25 to $2,500 to $3,000. That'll be my first chunk, and that copied out to $3 or $4 million in forex trading is a lot of money. But it's the point is this is a process that I've done for a lot of years. I pattern trade like this. I buy at extreme highs and lows. And the Swiss was one of those perfect setups where we're sitting here at these 20-year lows and 30-year lows, and even this pair, even the Swiss yen, which I am short on, and I took a stab at it. It's a small trade size because it's a yen cross, and I don't trust the yen at all this year. But I'm in at 169 on the yen, and I've already put the stop loss to break even, and I'm looking to see if this one wants to roll over to the downside and start to challenge some levels right here. So we have this low, we have this low. If we connect the dots on those levels, then we're dragging this. Oops, that's not a line right here. If we connect these lows, I'm looking to see if we can start to push into this level. If this is going to form a left shoulder head to neckline right shoulder, and we break that later, that would be great. If we make something to the downside even more substantial, where we push this trend line break, we take out this low here, and then we pull back and fail and sell off more. I'd love to see myself positioned for that, where my stop loss is above and I short it at the neckline, or I short it back at any type of U-turn where we go from pullback to pushing. And this one can unravel. And the good thing is even if I don't make a lot of money on the Swiss yen, but I get the direction right in the Swiss in general, I have all these other trades where the Swiss weaker is where I make a lot of money here. So anyway, good stuff. SPX, Harvey, sure, we can talk SPX. Got some interesting names here. We got Harvey Dent coming in today. I have Jerome Powell in my Discord. We got Michael Jackson in here today. I actually worked with Michael Jackson. Yeah, let's talk SPX. So SPX trading at 51.92. Let's just take a look at the tape again. So the Q's 1.31% to the downside. The DIA down almost 1%. The SPY down 0.92. SPX down, same thing, around 0.98. Where is it vulnerable? I did a trade yesterday on this one. I made some decent money. I had to get a little bit into the trenches yesterday during the day. It was an intraday trade, but right in here, basically I did an iron condor where I did a bull put spread, I did a bear call spread, price stays sideways all day, and ended up making a decent chunk of profit. So that was the nice thing about SPX is it's cash settled. There's tax benefits to trade the SPX because it's basically a split between long-term, short-term. So even if you day trade the SPX, obviously it takes a little bit more capital to do that. But if you day trade, you're not getting dinged on those short-term capital gains. It's a split 60-40, which is kind of nice. So it's almost like getting trader status by just trading this instrument. So anyway, that was yesterday. So today, 51.92. I do think that we are vulnerable on the SPY. I said below 518, which puts us right around this 51.90 to 51.80 on the SPX. Here's the SPY. This is just an easy way to see the correlation. So we are now officially, for the first time in months, right, since we had this level here early part of the year, or if we wanted to, if I drew a trend line off of this low, and I'm going to remove this trend line, but if I draw a trend line here, that trend line is getting too aggressive and it's already been breached, and it's a little challenging to read. So I don't love that trend line. I just connected the ones off the January lows. Okay. So we are officially now leaving a gap, and we're also on the right-hand side of the trend line. So today's pressure to the downside could certainly start to push a little bit lower. And so I said just below this recent level here on the SPY at 518, that candle low is 518.40. We get below that, I think the pressure opens up where the bears could take a little bit more control here, push this thing down into 510 or 509.50. And on the SPX, that would put us down into these previous lows as well. Again, breaching this previous level here, the SPX low was around 5,200. So getting below that, I would look at this additional level around 51, let's say 5120 to 5110. I think that's where we get vulnerable to the downside. So I think another, 90 points to the downside makes some sense. I could certainly see that happening. We are on the right hand side of this trend line, and this is what type of confirmation I want to see. Now, could all of that be ignored? The market would ignore it this way, right? If we have a red candle today and all of a sudden the market rips back up with a big green candle tomorrow, it might be that's it. That's all the sell off you get. Okay. But if we have a red candle today that's followed through with another gap lower or followed through with another red candle tomorrow, it doesn't take much for the S&P, especially in a downturn. Volatility is much higher in a downturn than it is in a melt up. So I mean, for us to get like a 50, 60, 70 point day, I mean, right now, by the way, from the gap yesterday, if I've got the SPY up on this other platform. So my gap from yesterday, we were closing here right around this 522 area, and we're trading at 517. So we've already made a move of about $5 to $6. The average move is less like $4. So here is the close around 522. We had a low today at 516. That's almost a $6 move on the day, right? The average day on the SPX is around 40 points. You can see they're 39 and change, and the average move on the SPY for the day is 403. So we've already exceeded that for the day. Now, that also means that if we exceed it for the day and we have a couple of those days in a row, we could possibly have a pretty big week. And that's what I'm trading. I'm trading a week that hopefully for my 522, or actually it's a 521 put. Right now that's up about $4. And I'm hoping that we push a little bit lower. I'd love to see this, truly get to a, let's say we push to 515. Well, that would give me $6 of real value plus the time premium out to next Friday. That means my SPY reverse iron condor is probably trading for like, I don't know, maybe $8 or $9. And if I go into my positions right here, my QQQ at the moment, I traded it for a 690 debit. Right now it's trading for about 780. So I'm up about 90 cents of profit on that one per contract. And my SPY position, this one, there's a little bit more going on here, but my April 12th expirations, 1, 2, 3, 4. I got into this one for a 638 debit or 640 debit. It's trading for 690. So I'm up about 45. It's exactly 48 cents, 46 cents. But I'm going to keep an eye on that one because it's just day one. And on some of these trades, I like to hit those like 15 to 25% take profit targets, which means I'd like to see this up at least $1. If I take $1 out of a $6 debit, so it was a 640 debit times, let's say 15%. So I need 96 cents of profit. That'd be my 15% take profit. Ideally, I go after a 25% move, and I need $1.60 profit. So anywhere between like 95 cents and $1.60 per contract, I'll probably end up taking some profit on those positions, which means I need another, I either need today to continue to sell off more aggressively, or I need today to be enough damage where the market's going to continue to sell off tomorrow. Lee, you got it spot on there, man. Yep. I like that saying a lot. Bulls climb stairs, bears jump out of windows. Exactly. They also say bulls, climb escalators. I think that's what it is, right? Climb escalators or climb stairs. Let's see here. Check oil for a bit. Yep. Oil. So I've been talking about oil since the start of the year. I've been bullish on oil, and my outlook has been pretty straightforward. I was surprised that this channel was so cooperative. It's nice that it was easy to position for, but this little run from, just above $80 to current price around 84, 85, the bulls are starting to step up their game a little bit with a little bit more aggression. And I could see this giving us a bull flag and coming back up. So I'm bullish on oil until we get to like 90 to 92, and then I'll turn bearish. I think oil is not breaking highs. I think oil is going to be pretty much contained here around this 90 to 95 area, and we're going to go into a range. There's major resistance here. There's major support here. I don't see, the world oil glut happening. I don't see a world oil shortage happening. I don't see demand going down like we had the concerns of recession for, China demand was down, U.S. demand was down. And what could ultimately happen is I know the U.S. is trying to strong arm Russia into releasing a lot of oil reserves into the global supply. And I could see that happening if oil gets up here. I could see that happening where all of a sudden the supply comes online and we start to retract from there. But until then, I think that we are going to stay pretty much postured bullish. To me, I mean, oil is bullish as long as we stay above like $77, $78. That's where the damage will be done by the bulls. Or I'm sorry, if the bears come down to take out that level. But until then, up here with a flag for aggressive bullishness, or we see this maybe pull back a little bit, find equal lows again, find some channel support, and then rally again. But I'm pretty bullish on oil to stay this way until we hit 90 plus. I'd say 90 to 94 is my profit window. If you are a buyer, that's my profit window. And then if you're looking to sell, I'm looking for confirmation to sell that high at resistance. Elevator down, you got it. Yeah, thank you. Escalator up, elevator down. Elevators are still smooth and slow though, right? I've never been in a fast elevator. I like the climb stairs, jump out of windows. That seems to be a little bit more what it is. So anyway, VIX is up on the day quite a bit. This has made a nice little jump. I set this chart alarm. I had this up to 20 bucks. I moved this chart alarm to this previous wick high that we had back in February. So if that does spike up, we have another uptick in the VIX, then we should see another day or two of selling. So again, numbers I'm looking for on these broader markets. If we have a 3% correction, awesome. 3 to 5% correction, totally healthy for a bull market. It's going to scare some people if it happens quickly. But we'll see. If this is a pretty contained and pretty controlled sell-off, it's like you gotta set your it's like if you're doing controlled burns, you gotta take care of the underbrush before it gets out of hand. And so there's a lot of things under the hood that are happening where it's not all rainbows and butterflies out there. We've got some stuff where I don't think the market can keep melting up without having some type of reality check. So it is kind of nice to see a reality check today. It's nice to see that some good stuff has happened all quarter, and Q1 was awesome, and it couldn't really do anything wrong. We're kind of off to a shaky start for this first part of April. But here's what's important: this is coming. We have non-farm payroll on Friday to give us the job numbers. Nick and I talked about that inflation, or the inflation numbers are next week. But we talked about the job numbers. If we come into this week's calendar forecasting 205, I mean the job prints have been pretty solid for the last. I can't even remember the last time I'm like, oh, what a huge miss in U.S. jobs. But it's the average hourly earnings and the unemployment rate that probably mean more to the non-farm numbers than anything else. And right now we had our last print was 3.9 and we're forecasting 3.9. If this prints higher and goes to 4+%, that could be a bit of a concern, because if I look back here, I think the lowest we had was like a 3.3 or 3.4. I've got to go back quite a ways for that. But we very quickly came down to like a 3.4%. I don't know if I can go further back. Let's see, those are on the fours. I mean, I'm back into 2015, so it's not that far back. I mean, just think about pre-COVID. It's like 2015, 16, the markets are sideways. 2017, 18, it was a good run. 2018 had a bit of a correction. 2019 was the Fed put was in. 2019 was a rally. We got sub 4% in 2019. 2020 was your instant spike up the double digits, and then from there it quickly went back down. But I was looking at there's a 3.4 in May of 2023. That might be the one I'm thinking of. So right there's 3.4. Okay. So May of last year. And like I said, if we have an uptick of 1% in a 12-month running window, if by May of this year, which is not that far away, right? That's just over a month away. If we somehow have a rally of unemployment where we print up to like 4.3, 4.4, that is an undefeated kind of leading indicator jobs numbers that a recession is around the corner. So I don't know. I think that's a little bit more important than this huge wide 2 to 3 year window for the inverted yield curve, because the inverted yield curve is also a Fed policy window, right? If the Fed doesn't want to cut rates, if the Fed doesn't want to raise rates, the inversion could happen for a while, and everyone's talking about the yield curve has to sharpen and steepen before it gets neutral again. And everyone's talking about where the 10 year is going to be and all that. It's like if you want to trade bonds, then all that stuff matters. And bonds are great. Bonds are fine for long term, but I'd still take my equity growth over bonds anytime. If you want safe haven, then yeah, I mean you're still in a good position for the next 6 to 12 months to wrap up a money market instrument or get into some certificates of deposit, trade treasuries and try to get that 5+% yield. But we all know that let's fast forward 12 to 24 months. More than likely, everything you see at a bank, everything you see for yield, everything you see for incentives, they're all going to go down. I mean, I watched a video last week on the Robinhood credit card that's offering 3% cash back and everything, and possibly up to 5% cash back and everything. There's no way it's going to hold that way, right? A lot of these like 5.5% interest rates they're not going to stick around more than like another year or two. We can't service debt at the percentages we have. I mean, right now we're basically adding $1 trillion to our debt every 90 days. So if you service that at 5.5%, it's expensive. All right, one more, and then I'll switch off here. So Tesla. So a couple stocks I like. I've got a whole list here. I'll share it with you if you want to. If anybody's in my Discord group and we talk about this in Equities on Demand, there's a whole list of stocks that I talked about last week that I want to do some deep diving into. If you're interested, here they are. So FXI, AA, CLF, Disney, Ford, GDRX, MRO, NCLH, which goes along with CCL, which is a cruise line. That's Norwegian Cruise Lines and Carnival Cruise Lines. J&J, SoFi. SoFi also I have Rocket, which are two totally different companies, but I bought those at the same time on SPAC plays, and I'm lowering the cost basis. Johnson & Johnson already did. AT&T for a value play and a high dividend. HG is copper futures. I would put copper with silver and obviously gold, so we can go GLD. And then I want to look at some airlines. So Delta Airlines is DAL. And then if I looked at AAL or UAL and LUV and JetBlue, doesn't mean I'm taking all these trades. It means I'm just kind of assessing, like, it's a cyclical rotation for airlines. Delta is probably the best one as far as financials, and then you can look at SkyWest as well, which I think is SkyW. That's kind of exposure in the airline industry. And then for casinos, Wynn and LVS. I want to see those pull back to certain levels. And then Frank was hitting me up on Apple and Nike and Lulu. So I do like all these. I'm still long on Apple. I'm looking to stay out of the way with some bull put spreads. I'm going out further in time. The trades I talked to Frank about here. Let me pull these up. We had a little chat in Discord. So let me find those. I like longer term on Apple. What did I look at here? Volatility. Oh yeah, so Nike, I was looking at a bull put spread 90 by 87.50, or I was going out to December and moving that strike even further down and 80 by 75. Apple, I was willing to go out to like the 150 by 145, still collect $1 on that. That's way out of the way. We're trading at 170 right now. So I think that's a pretty safe play to go out to. I mean, that's further out. You've got to go out to December for that one, but time is on your side when you're doing credit spreads. And then for Lulu, I wanted price to drop to 350. Lulu had a bad earnings report. It was dropping pretty aggressively, and it's still dropping. I looked at this one on the higher time frame and also just trying to find some weekly support. So here's the weekly time frame on Lulu. All right. So we have this high, we have the support around the 200 EMA, we have this high. If we find support at the 200 EMA, here's what I'd like to see. If we tap the lows and then we close back above, there's a bottom. Let's see if we have a rally. Just a channel, right? But I think there's more pressure to the downside on Lulu. This has been really aggressive since earnings. But if we drop down to the value of my EMA is around 342 right now. I'd like to see 340 to 320. If I can find some stabilization in there, then I'm about like a repositioning. Nike still heading lower. We could possibly breach this level in the late 2022 bottom around 83, which is why I'm willing to go out farther in time and say my 80 by 75 looks pretty good for taking $1 credit. If I can get 20 to 30% width of that credit spread, I'm pretty good with that. And then Apple right now going out to 150, we're trading at 168. So if I lower this to 155 or 150, I'm fine giving Apple that type of breathing room to find also some bigger support around the this is my 144 and 200 exponential moving average. Tesla trading around 164, 165. Let me go to a cleaner chart here and then I'll let you go. Okay, so we have oversold conditions on Tesla. We haven't breached the levels around 160 yet. It looks vulnerable. I'm not going to lie. It looks very vulnerable as far as the recent trend. However, I will say this on Tesla. I'm extremely interested if we come back to this low right here. Right. So I might be, kind of positioning early if I try to, pick the bottom on Tesla right now. I don't mind having some exposure, but I would say this: if I'm looking to own Tesla, anything under 120 to me looks pretty attractive. Okay. So even if we hit, I mean, we're already at a 50% pullback, by the way. I think Tesla is beyond the 50% mark. If we go from this all-time high into current price, we're trading around a 60+% discount. Now we were as low as from this high to low here, we had a pullback of around 75%. That is crazy deep. All right. So, I mean, we're at 60+% now. I don't mind having some exposure. But if this is going to fall, it doesn't surprise me if we fall and this thing is beat up enough where all of a sudden people are talking about, Tesla's uninvestable, Tesla's impossible to be in, blah blah blah, and then we have this level that just becomes the floor. So if we respect the lows, I'll hold Tesla. If I'm going to own shares of Tesla, I don't mind owning it there, because even if we get back to these highs again, what's kind of nice is anytime you have a 50+% pullback, if you get to the all-time highs, that's 100% gain, right? So if we get to these lows again at a 70+% pullback, now your gain is 300% to the upside. That is asymmetry. So if we're patient on Tesla, I think it's pretty solid. I'm going to look to get some additional exposure in here, but just trying to stay out of the way. I don't really want to get assigned if we're catching a falling knife, but I'm liking this, current level. I did look at this from a head and shoulder standpoint too. If this is a left shoulder head to neckline, and this is the, kind of longer drawn out right shoulder, if we do stabilize here, that pattern could still exist. But to have Tesla move like that, it's probably going to have to be a pivot. It's going to have to be a sentiment shift, and it's going to have to be something energy related, probably not car related. I don't see Tesla doing much in the car space right now when they're just cutting and slashing prices left and right. But I do see them doing something disruptive in the energy space with, maybe batteries, maybe production, maybe patents. I don't know. And I think that's why they're also, you got a lot of things going on here. You're trading Elon Musk with Tesla. You're trading some uncertainty with Tesla, but I think longer term, good levels and 60 to 70% off from all-time highs. I'm okay with that. So that's all. Okay. I'll let you go for today. If you have any questions, feel free to type it in the chat. If you'd like to join me, again, we'll be on this whole week. I'm sure I'll join the team. I think tomorrow I was looking at, they're doing a long stream tomorrow. Be sure to jump in and grab that 45% discount on your EDGEFINDER. That's a huge deal. Happy anniversary to A1 Trading. And if you'd like to join my Discord group, I can post that link right here. So it's a free group. It's a free community for me if you want to follow me. I post a blog every Friday. I post top weekly pick every Monday. I do private instruction, communities growing, all that good stuff. So let me post that if you're interested, and I'll just share that. Here's a link that doesn't expire. Easiest way to do is get the link right now and join it live, and I'll post it anytime I'm live here. So my Discord. So there's my YouTube channel, which is youtube.com/Chris Pulver. And I changed the handle to Chris Pulver Trading. So thank you for updating that. And then there's my Discord if interested. So I'll let you go. Happy trading, lots of profits, everybody. See you soon. All right, bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the EDGEFINDER for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.